if you go into Citizens, and if you're following the Citizens Property Insurance Corporation, they've been growing in size, right? So they're projecting before the end of the year, December 31st, 2022, they're going to be well over 1 million policies. Well, why is that bad? It's bad because the risk exposure or the assessment exposure for Citizens is extremely expansive, right? So currently, and this will grow with this number, but currently I think Citizens risk exposure is about $300 billion, right? So, they have about, I think, claims paying capacity between cash and pre-event bonds somewhere around 9 billion, but 300 billion in exposure, right? So if we had a massive storm and they get wiped through that $9 billion, that means in perpetuity, every policyholder across the state of Florida is going to pay back all those deficits through assessments. And if you're a Citizens policyholder, the assessment risk is even higher because you get assessed first as a Citizens policyholder, and it's much more expensive. I think you can get an assessment up to about 30% of your premium, a one-time assessment before they go into the regular assessment, which then is like a 2% assessment on all policyholders, excluding like health and workers' comp, and then an emergency assessment, which basically would go on in perpetuity forever until the deficit is cured. So, there's no good news about repopulating Citizens. You really want these policies to be in the private market. You want to have a competitive, robust private primary market where insurance companies are consistently turning an underwriting profit. Can you have outlier years where, maybe a couple quarters they don't have an underwriting profit? That's normal. But to have 4 years back to back, almost every single quarter, the vast majority of the entire marketplace turning in underwriting losses, that's not an anomaly, right? That's evidence that there are systemic problems with the marketplace.